because then what you have is you'll have the happiest, chattiest cap table, and you may never have to raise money again. Because if you get that right, then the same investors come in again with the big check, because the first check is not the big check. The big check comes in later, and they bring their friends. And then that's your crew.
Welcome to the Inside the Fund podcast, where you get to learn about raising capital from investors on the other side of the table. I'm Helena Fogarty. I'm a fundraising expert who helps startups raise their seed and Series A rounds. And today I'm joined by Jason Torres of SANA Capital. SANA Capital is an early-stage growth fund investing in U.S. healthcare services and solutions at the intersection of market demand and strong policy tailwinds. SANA Capital fuels the future of healthcare through strategic investments in sustainable solutions at the intersection of healthcare services and technology. These are a lot of syllables.
Yeah. Sorry for the mouthful.
They specialize in identifying and nurturing growth stage businesses poised to make a lasting impact. The SANA Capital team believes healthcare should be a fundamental right, not a privilege. I love that. By investing in sustainable solutions and championing overlooked founders, including underserved markets, they strive to increase access, improve outcomes, and reduce costs. This is also good. I love it. So I'd love to just, learn more about how you got started in VC investing.
Yeah. Well, first off, thank you. Appreciate the invitation. And I got into VC and PE investing. After business school, I went to Stanford. Before that, I was on Wall Street. I had an opportunity as an undergrad to get an internship on Wall Street. It was with a program called SEO, Sponsors for Educational Opportunity, and they place talent onto into firms. And so I interned and then worked at Salomon Brothers and throughout all of the mergers. So it doesn't exist anymore in its former form. It's, I guess, Citigroup now.
Yeah.
But yeah, I interned and worked at Salomon Brothers and Salomon Smith Barney. And then I moved over to Deutsche Bank, where I was trading. And I covered healthcare and technology companies. And I was on the prop desk. And so you're trading or making investments on behalf of the bank's balance sheet. So you had to develop conviction on, is this a good business? Is this a good company? How much to pay? And that's really where I learned about investing. But, listen, I'm first generation, born and raised in New York City and Brooklyn, family's from Puerto Rico. I got into this space the long way, or the non-traditional way. I didn't have CIOs or asset allocators around the table. My mother was a social worker in New York City, protecting the most vulnerable populations. And so I got to see those gaps that exist around who gets access to capital, who gets access to healthcare. And then, sort of as I went on to school, I got to see who got access to capital was very similar to what I saw who got access to healthcare. So that's really how I got into the space.
So when you started trading healthcare, was that something you were able to choose, or was that something you were just given as an opportunity?
When you're coming up, there's a senior trader and a junior trader, and the junior trader does whatever the senior trader doesn't want to do. So this is way back before healthcare was cool. Healthcare is cool now, but at the time, no one wanted to touch it. No one wanted to focus on it. It's government driven, it's bureaucratic, it's lots of policies. And so it's cumbersome, and you have to read and understand and study policy in order to have a view. And most investors will throw their hands up and say, oh, that's government risk, we don't want to take it. But it's 20% of GDP, so it's kind of hard to ignore. And so it rolls downhill. And so that's how it landed in my lap. But it was fortuitous because I had, it's part of the fabric of who I am, just based on what mom, did with protecting vulnerable populations. So I was like, yeah, I can study this, and I'll have a view, and I'll develop a thesis or a theme on how to do well and do good. And so that was the inception. That was the kernel for how I got into, a healthcare impact investment work.
Yeah, and I love you giving us the through line because there's a lot of ways to do healthcare, and impact is a very, in my opinion, I love it. Right, like that's so much better than for profit or for the data play or for exploiting, really profit seeking during healthcare. Like I see that and I get it. We're all here. We're a capitalist society, but I like the way that you all are approaching this.
Yeah,
It's excellent.
thanks.
And so you originally got into VC with Mensa.
Mm-hmm.
Tell me about that. How'd that happen?
Yeah, so I finished up B school, and that's where I got the entrepreneurial bug.
Mm-hmm.
And I decided I was either gonna be the entrepreneur or back the entrepreneur.
Yeah.
And thank God I went out to the West Coast, because if I hadn't, I probably wouldn't have had that um, that that viewpoint.
Mm-hmm.
And so when I came out, I started angel investing my saved up bonus money into companies. I'm an early investor in Athena Health, early investor in WellCare, and partnered up at Mansa, which was kind of in early stages of a VC type of firm, and that's how I got into it. But I had to kind of fumble my way around into it. I didn't. It wasn't like a big firm that was recruiting and what have you, and so that's how I got into it.
Can you tell us a little bit what Stanford was like? GSB, right?
Yeah, Stanford GSB. Yeah, so class of '07, and that's where I learned about just risk and career risk. So in the Northeast, at least it historically has been, work harder, climb higher, run faster, and become a managing director at a bank like Goldman or JP Morgan, or become a corporate attorney, become a partner at a big law firm. In the Northern Cali, that's sort of the worst thing you could do. and and so and they laugh at that
No.
very much in that way. It's like, you're giving up your life for some pretty capped upside.
Mm-hmm.
You do really well. You'll do fine as a running a desk or running a group, investment banking group. You'll do just fine. But it's based on how well the market does,
Mm-hmm.
how well the division does, if you're a fixed income, if you're equities, if you how well the group does, and then how well you do. And it may even be another layer in there, but it's very much how well everything else does, and then how well you're effectively liked within your role there, because it can be political as well.
Mm-hmm.
Whereas if you're an entrepreneur, it's are you successful or not? And if you are, there's really no limit into how high and how successful you can be. Whereas if things don't work out, if it's a bad year, you're just not that good, or this isn't, well, you'll be out of a job on Wall Street, and that's not that different than, so that, if you're an entrepreneur or doing something entrepreneurial.
Mm-hmm.
So the downside is quite similar, whereas the upside is wildly different. There's this perceived safety in being in a big firm, and it's just false. But I learned that going out west.
I'm just digesting. There's so many thoughts coming up from the differences in business school, because I graduated from NYU in 2006. So same basic era, completely different, right? Anyone who was doing finance was shooting for the MD role down on Wall Street.
Yep.
Yeah. So just very different vibe. I appreciate you sharing that with us. So how did you know you were ready to start SANA Capital?
Oh man. I had come off of a year where I spent in Puerto Rico after the hurricanes. It was Hurricane Irma and Maria. And I spent basically a year there just smiling and dialing, calling up folks that I knew. My family's from there.
Mm-hmm.
And so folks that I knew in healthcare, to see how I could be helpful and supportive to an island that really needed it. And so that was, and when I came back, and so we had pretty sizable effort there. We were able to get resources to the island. We got nurses that were able to donate their time, some specialist docs that were able to donate their time, and this is just from from relationships that I had in the industry. And when I came back, I kept this is I kept getting asked from colleagues, some LPs, um, hey, what are you gonna do? I was at Mansa for 10 years.
Hmm.
We raised capital, we allocated the capital, performed really well. And just got to a point where it was different true norths, differing, what the future is going to be. And I wasn't going to sign up for another 10 plus years. And we did really well with that fund. And so, um, I wanted to be much more impactful with what I wanted to do. And when I came back, I said, this is the type of impact that I want to have
Hmm.
at in a firm, fun type of environment. So that's when I decided to, and have been very disciplined and thorough and methodical in getting feedback, getting counsel, getting guidance on, all right, this is where I ultimately want to um, have in terms of an impact,
Hmm.
and how can I backtrack and engineer that. And so that was how I got the confidence to to do that. Peers,
Yeah.
when peers have belief, especially your peers, and they put some capital down, it's like, yeah, I'm in. Whatever you do, I'm in. That's real. It's like, wow, if you believe, then I maybe I can do it.
Yeah.
And so that's how I get the the belief to go out on my own.
What was it like to be in Puerto Rico immediately after the hurricanes?
Oh, I flew in. I bought a one-way ticket. It was probably the cheapest ticket I've ever, or least expensive ticket I've ever gotten. The plane was empty.
Yeah.
The island was, other than a couple spots in San Juan, the whole island was black.
Yeah.
It was scary black. It's like you saw the blue of the ocean.
Right.
You didn't, and then like this black hole, and it was like something out of a movie that didn't, one of the, like an alien movie, or the Upside Down or something like that. It was so pitch black that I was like, what am I looking at?
Yeah.
And it feels like there's something in front of your face.
Mm.
And so but yeah, it was difficult. You knew exactly who had power because they had the generators,
Hmm.
and you could hear it.
Yep.
And but yeah, people suffered.
Yeah, it's crazy. How is it now? I mean, how many years are we out now?
That was end of 17, September of 17.
So we're 8 years past.
8 years.
It's not fully rebuilt, probably.
No. I mean, it's
Back as
still,
was.
the power system grid is still sort of stitched together. They still
Cool.
have outages at times. So I spent every New Year's there.
Yeah.
This past New Year's, there was an outage from New Year's Eve into halfway into New Year's Day.
No.
I mean, the worst time. Yeah, it's so.
All you have are fireworks then, I guess.
And
for
so,
New Year's.
hurry up and drink whatever's on ice, because that's it. Like, that's what you have.
Where I live in New York was very affected by Hurricane Sandy. So that's the insight that I have into it, but it's not even, that's not even the same level of devastation,
Right.
and we're still in the US, so that we're still somewhat supported. Whereas I think that island was just, I know it's part of the US, but it was just kind of deserted. It wasn't supported by the US in the way it should have been.
Right.
Yeah. Wow. That's amazing. Sorry to go deep on that. That just really, really touched me.
Yeah,
So you're raising now.
I am.
You started your own fund. You're still kind of bootstrapping it.
I am.
How's it going?
It's going. But I gotta tell you, it's trending in the right direction.
Mm-hmm.
We've been anchored up, so we've attracted some of the largest healthcare institutions on the globe. So Eli Lilly backed us. We've got a number of other institutions that have come in. So we've got 2 states that have come in. A university endowment backed us. We have a foundation. And so we've gotten some really good traction from institutions,
Mm-hmm.
and we're looking to continue that. We're in final diligence with a couple of larger organizations, some healthcare organizations, and we've had to go the full spectrum of turning over every stone. We went to all the emerging manager programs and it was okay. And so now we're really focused on aligned institutions, folks that care about growing their, their pool, so returns, and that care about impact in healthcare. And so the two are not separate. The two can be, and most often are, similar and the same. So you can do really well and do really good in healthcare. And so that's what we focus on. So the types of institutions, are like insurance companies, larger hospital systems that have balance sheet capital, healthcare foundations, anyone that cares about what we care about, which is increasing access, improving outcomes, reducing costs. So
Yeah.
alignment.
And how do you get in front of those people?
It's hard. It takes time.
Yeah, it does.
You have to leverage your network and try to find the right person, because there's not some directory. And the folks that you want to talk to, everyone wants to talk to them. So they're not out there, at these conferences and panels, and they're very inaccessible.
Yeah.
And so it's hard to knock on a lot of doors. You've got to leverage the relationship. Oh, I see you're connected to so-and-so. And I typically know folks on the operating side. But the investment side is usually quite, shrouded, it's cloaked. And I have to navigate my way to do that. It's not easy, and it takes a long time. It's a long time. We're in the, business of trust.
Yeah.
That's the business that we're in.
I'm just really impressed because when we spoke outside this room, we were talking about Eli Lilly, but now you're like, oh, and a couple states are in and university. I'm like, okay, how does that happen? You're like, that's amazing.
Like with the university endowment, thank God I had done business before with the chair of the investment committee. Had I not, he wouldn't have lobbied to have us really considered. And so it sometimes it takes that.
Yeah.
And you have sometimes, if they have intermediaries, if they have outsourced CIOs, or if they have consultants, the incentives really, the mission drops off when you outsource that. And so you really need to have somebody on the inside lobbying for you, because there's lots of, opportunities. You can say no to anyone for any reason. There's a whole list of reasons. You just got to pick.
Yeah.
And so that's how it's going. I mean, it's trending in the right direction. If there was one thing I could change, I'd like to change the pace.
Yeah.
1 or 2 clicks faster. I'd love to do that, but it's trending in the right direction. So I've gotten to the point where I've, crossed the river Rubicon, burned the boats, only going forward, not going back. And so either die on the beach or take the castle. And I don't love the beach, but I'd rather be in the castle.
So when did you burn the boats, would you say? Was it right away? Like as soon as you hit water, or?
I thought, going in, I thought this was going to be a lot faster of a fundraise.
Yeah.
And it has not been. It's been taking a long time. And you have a really difficult fundraising environment for a bunch of reasons. Just the turmoil that's going on in the markets, some of the investments that have been made into VC and growth investments haven't come back yet, and so there's just this little bit of a pause, and then it's like, well, maybe we just kind of just do re-ups only for now. And so it's if you're not in that cycle and having returned, it's hard to get a seat, get a spot. So there's a bunch of reasons for why it's slow, but we made some traction. So I'm proud of where we are.
Yeah.
We just gotta finish.
So I think this leads into like our last question about you raising funds, but do you have advice for other emerging managers who are raising?
Oh, it's gonna take a long time. Plan on, plan on years. You've got to be able to sustain yourself and the team during that time. And yeah, fun, I'd say to focus, if I could do it all over again, I would start off by focusing on aligned organizations, getting very crystal clear on what we do really well and where that aligns with other groups. So we did a good job of making sure of separating the thinking and then the doing.
Mm-hmm.
We spent a lot of time making sure all of our materials were really top notch. There's no reason, we're going to overwhelm folks with our thoroughness and making sure that we're institutional ready,
Yeah.
and that there's lots of reasons to say no. Being ready is not going to be, or not being ready is not going to be a reason that we give to anybody. So they have to find something else.
All right, so let's switch to investing.
Yeah.
You investing, you deploying capital.
Yeah.
I understand you're deploying some capital now. When did you switch from, I mean, you're still raising funds, you're starting to deploy capital. When did that switch happen?
Yeah. We put out a term sheet to a company, and so recent, as we close on capital, then we can start deploying. We just have to watch the pacing and making sure we don't, have too much in terms of concentration. But yeah, so we're starting that now, and yeah, so we're in those phases now. We're starting to, taking meetings with founders, and looking to, to deploy.
Mm-hmm. Excellent. And how do you evaluate founders?
Yeah, so pretty disciplined process. And this goes back 20 something years. So is this a good business? All of the typical business school stuff that you would ask: Porter's five forces, policy tailwinds, all of the, is the market growing? Is it shrinking? What's their position within all of the stuff, all of the numerical stuff that you would expect? And then, is this a good company?
Mm-hmm.
And that gets to the founders. So people, management, leadership. And what we look for, and this has evolved over 20 something years now, we'll look for, magnetism or charisma. So can the founder attract top talent? Can they attract capital?
Mm-hmm.
They're going to need a lot of both to build a great business. Can they get customers? We look at authenticity. So how authentic is the idea? How authentic is the team, and the overlap of the two? We look at tenacity. Can the team go the distance and weather, dark times?
Mm-hmm.
There's always dark times, especially when you're building something from nothing. There's always going to be dark days. You lose a contract you thought you were going to get, a major departure there's always something that happens. You never get, you don't get the contract when you think you're going to get it. You're behind on pipeline, on projections, and all of the stuff. And so, are they going to tuck tail and run when there's a problem, or are they going to finish taking that hill, not necessarily knowing what's on the other side? And then the last thing that we'll look for, and in no particular order, is just the ability to evolve. So can the needs of the organization are going to change over time?
Mm-hmm.
When you go from idea to building a business to having contracts to now building a big business, the needs of the organization evolve, and can the team evolve with that? And so the way that we look at that, are the motives? Are they trying to change the world for the better in terms of healthcare? Are they looking to build just a fantastic business? And there's different personality types that we look for in that.
Mm-hmm.
So, and we draw and we tease bits of information out. Just, negotiate a term sheet, and you'll see exactly what a founder is about. And if they're, really concerned with the size of the slice relative to the size of the pie and the dilution and all of this stuff, they're solving for that. Well, then they're not solving for the long-term, business. This is a repeat game.
Yeah.
And, what I tell founders pretty early on, and it's like, look, you're going to need to raise money again. And so if you have a ridiculous valuation or a very high valuation, you're going to need to justify that high valuation with a ridiculous projection. And if you do that, one that you are not going to make, Well, now you have a cap table or some folks in the cap table that are going to be very grouchy with you because they overpaid. And they're going to get that back one way or the other, or make it really difficult for you to raise the next round. So you're setting yourself up,
Yeah.
um, for failure, unless you absolutely hit that projection. So the way that I, you know, talk to founders very candidly early before there's even any relationship, I said, look, make your projection within a, um, 95+% confidence interval that you're going to make and exceed this budget, this projection. Because then what you have is you'll have the happiest, chattiest cap table, and you may never have to raise money again. Because if you get that right, then the same investors come in again with the big check, because the first check is not the big check. The big check comes in later, and they bring their friends. And then that's your crew. And that's why the hardest deals to get into are the founders that have been successful and have made money because now they can, and they understand that dynamic that, listen, I've got to make them money, and then they'll come in at the rounds, and without having to pay ridiculous valuations, for something that is being in the process of being built.
I hear that over and over again when we're talking here at Inside the Funds. Like, don't over index on valuation when you're raising a round. Like, it's just, this isn't the only time.
That's right. That's right.
And I've also seen exactly what we were talking about with a company whose wire date is this week, actually, on their Series A. And their last round, the biggest investor in their last round had introduced them to their partners right now. It makes it a lot easier.
Yep.
It's like there was a lot of preparation for the last round, and then this one was like, oh no, Mark is introducing us to this company and this fund. It's amazing.
Yep. Especially for the ones that are doing well, you can manufacture some wins early on as a founder by if you kind of sandbag a little bit, not too much, but sandbag a little bit to give yourself some cushion that you can make this. And so when you do that and you make and exceed your numbers, well, then all of these VC and PE firms, they go and raise capital, and they always usually have co-investment, or if there's an opportunity to put in more capital, they'll go to their large LPs and say, hey, let's put in a little bit more. And for the ones that how are they doing on budget? Yep, they exceeded budget. Oh, okay, great, sounds good. And so now you've prearranged for this future infusion of capital that you're going to need, based on, now you do have to get comfortable with some dilution, so you're not going to own the whole thing, but it beats the alternative of having a down round or a flat round.
Yeah.
And you're sideways, and now everyone's looking at every single thing every quarter, and then you're hyper managed, over managed. And so you don't want to get into that spot. You want to build the business and be able to be nimble and not overly critiqued because you missed numbers.
Yeah.
And so set yourself up to win, get comfortable early, and pick your partners. Who's going to be here for the long term? Who's going to come in again bigger? And do they have capacity? And who's going to help me grow my business? Those are the best types of investors.
Yeah.
Right? Who knows my business? Or is this, they're just checking a box to fit an asset class category? Or do they really care about this?
Yeah. And we were talking about this before we turned the cameras on, but picking your partners is only possible if you have people interested in your deal and people at the table. And that's also how you drive the pace of the deal a little bit faster, usually.
Yeah.
By that competition. Yeah. You lead rounds, right?
Absolutely. Yeah. We'll lead. We'll partner with others. We don't need others to develop their conviction for us to develop ours. We study policy. We translate that to a business strategy. We help execute. We're very active. Getting contracts, getting into the government space if we're commercial facing, or into the commercial space if we're government facing. That's what we do. That's how we do it, and that's really worked well for us. It's been a successful blueprint that we're always ever optimizing, and but we'll lead rounds. We'll go solo. Yeah.
While you're in this time where you're raising and just starting to deploy, what makes running SANA worth it?
Oh, I mean, look, it's taken me a little while to find out what I'm passionate about and what my purpose is, but it goes back to where we started
Yeah.
from, from mom when she was a social worker and protecting vulnerable populations. That's part of the fabric.
Hmm.
And so seeing those gaps in healthcare, seeing those gaps in finance, um, I care about equity in terms of access to capital, equity in terms of access to healthcare. So that's why I pop out of bed, 5:15 every day. That's, and keep doing it. So I'm actually quite blessed and fortunate to be able to be doing this. Um, you know, what gets me what keeps fueling me is, the team, people like Jonathan, and the fellows, and they believe in this, and they want to do well and do good as well. And so to have quite a population and following of folks that believe in the same thing and want to have the same impact, so much so that they're devoting their lives to it and they're putting their own capital down into it, that's real. And so that gives me purpose.
We're talking about doing well and doing good. I want to just talk about what we talked about in our kind of pre-interview, which is you've had some great results.
Hmm.
Like this isn't soft, like impact. Like you had some great results. So I think you were throwing some numbers down, like 14 out of 17 had returned. I'm probably getting those numbers wrong, but tell me a little bit more about the results that you've seen in terms of the companies that you've invested in.
Yeah, yeah. So as an angel, had roughly 10 companies, well, 9, 10 companies, had two really big winners.
Hmm.
Two companies go IPO.
Amazing.
That's how I got into this space. I got to see all these other VC and PE firms. I'm like, whoa, okay. I didn't know that. Even after coming out of Stanford, I'm like, oh, okay. I started to learn about it there, but that's why I got to see it.
Yeah.
And then a bunch of companies kind of in between 2, 3, 4x in terms of returns, and then a loss on one. So there's always losses.
Hmm.
But roughly, and then my last firm we'll talk about in a second, roughly 1 in 5 goes big.
Yeah.
Big is kind of 20 plus X return, could be 30, could be a little more. Um, Three will be in between, kind of 2, 3, 4x, which is good. That's really good for for private equity.
Hmm.
Not that great for venture.
Yeah.
So and then a loss on one, whether it's partial loss, full loss, there'll be a loss. That's roughly what we have experienced. Even at my last firm, we had 6 companies, big winner in the managed long-term care space. That's going to be close to a 30x return. It's going to more than 5x return my last fund, that company alone.
Yeah.
So really, really happy with how that turned out, and and doing the right thing. So doing well and doing good. Doing well started off as a Meals on Wheels, and the mission of the founder was to allow seniors to age in place
Hmm.
with dignity. And so white glove service for what's called dual eligibles, folks that are on Medicaid and Medicare,
Hmm.
and just delivering to those populations. So poorer elder, populations.
Yeah.
And so what they've done is they've over delivered to that population. And the way that they have grown and been so successful is what they sell is a cost containment solution
Hmm.
for payers.
Yeah.
So here's your most complex, costly population that's blowing up your model. I know this population, I know this demographic. I can service them better than anybody else that you have.
Hmm.
And I'm going to do it at a fraction of the cost, and you're going to pay me for it.
Yeah.
So they've gone from roughly 40 million in revenues to almost 2 billion
Wow.
coast to coast,
Nice.
and the full suite of managed long-term care services, and they've absolutely knocked the cover off the ball. So when we say do well and do good, yeah, you can do exceptionally well and happens to be doing, having an impact in populations that have been underserved.
So we've talked about a lot of things in our conversation, but I know that you have benefited from programs like SEO. and you're focused on diversity and equity, to use some charged words these days. But how do you address this in your work, like making sure that more diverse founders get seen?
Mm, yeah, we've had to think a lot about this in the past 6 months.
Mm-hmm.
This administration has, terms like DEI, diversity, don't say gay, can't have whatever it is, then that becomes, problematic. And so where we've gotten to is what matters is the work.
Mm-hmm.
How we characterize it, some of that is sickening, but it's not all bad. So what I mean by that is we'll guide um, companies and founders and executives to say things like, all right, you're no longer, or you're not a Black maternal LGBTQ health something. Those are the charge words. And so like you're no longer that type of company. You're a cost containment solution for high cost populations that are blowing up the model. That's a message that can be received because while it spreadsheets populations and demographics to a number, at least that can be digested, and it separates it, or it isolates it from the demography of the demographics of it, whether it's Black or Latin or culturally competent or LGBTQ or whatever. And so, but you can't ignore that if you're looking to have a particular outcome, especially around costs.
Yeah.
So you're a cost containment solution for high cost populations that are blowing up the model. The work is what's important, and getting those contracts in order to do that work. Because if they ignore it, if the system and this administration wants to ignore those populations, then okay, it's only going to increase costs of the system. You're going to have more ER visits, which is the least efficient, most costly. So, or you could have an actual, you actually over deliver, take a page out of the managed long-term care company where they over delivered services in the home, kept the senior there, happier, fraction of the cost, better outcomes. Net was positive.
Yeah.
So take a page out of that book and say, okay, we could over deliver stuff that we normally wouldn't even be covered is now covered, and you reduce a readmission or an ER visit. That's huge to the system and to reducing the cost. So we'll focus on the cost component of it, on the ultimate outcome, and less about the demographic. Just know that whatever the demographic is that's least served, that's who we're looking to serve.
Yeah.
Whoever that may be. Today it's called, Black maternal health, it's elder care, it's rural health, that's under attack. It's vets and mental health. So it's not just all, Black and white or, LGBTQ or not. It's the seniors. It's our seniors, it's our parents, and it's folks that are in rural areas. It's the vets. Every sub-demographic, you're able to, if there's a gap, that's what we're looking to remedy and monetize.
Yeah. So how do founders get in touch with you all?
I mean, look, we've got a team, our website, obviously, sanacapital.com. I think our info at sanacapital.com. And I mean, look, we try to be helpful with founders. We've got we worked hard to have a reputation of being good partners with founders. Even if we don't end up making an investment, we'll look to direct them to folks that could. So maybe it's too early, or maybe it's it's more life sciencey, and that's not what we do, or maybe they're heavy into something that's just not our focus area, which is fine. You probably do really well. It's just not where we can add a lot of value early on, and then we'll make introductions to customers. So let's say they're pharma facing. Well, our anchor is Eli Lilly, and that's part of why they made an investment in us, because we have access and reach. And so when they're ready to, for a potential contract like that, we make those introductions.
Excellent. So when you meet with somebody, How soon do you know it's a not right now or a no?
Fairly soon, for a couple meetings, we'll get a good idea of okay, this does this fit within our thesis, and I think they know too,
Hmm.
and we try to be, we work really hard at trying to be very transparent and clear about that. A lot of times it's not right now. It's convert your pilots into contracts,
Hmm.
market rate contracts.
Yeah.
Are the dogs eating the dog food? That's one of the, things that learned over at Stanford and the BC, you know. If they're eating the dog food, great.
Yeah.
Because then I can pick up the phone, smile and dial, and get other contracts. Even if it's clunky, that's okay. It doesn't have to be, perfected or optimized. We can help shape that and help, drive that. But if no one's buying at a market rate, it's I can't fix that. So I try to stay in our lane as to the timing. But that's they can get in touch with us, and then we'll make some time and get them to the right folks. We know a lot of folks too,
Yeah.
and we'll try to help. I'm a Coffin Fellow, so we've got a great network of other VCs, and so we try to leverage that and share deal flow. And they call me all the time, and so I no problem, no look pass to other groups. But yeah, we try to be helpful, and then with customers or
Yeah.
potential customers, because getting a contract is just as good and impactful, maybe even more
Yeah.
than getting a VC to believe. And it takes a long time to get a VC to believe, because what they're looking for is you getting a contract for them to believe. And so that's where we'll really spend our time.
You have any hot takes on the industry?
I mean, we study policy, so we've done the deep dive into this policy landscape, and there's opportunities, but there's massive cuts to Medicaid, almost $1 trillion over the next 10 years.
Mm-hmm.
Rural healthcare is going to be severely impacted, and I'm guessing that there will likely be some changes to this particular legislation after about a year or so of that being digested.
Yeah.
And there's some real turmoil and closings of hospitals.
Mm-hmm.
There was a small amount, I think it was like 50 billion, which is nothing compared to the trillion that was cut,
Yeah.
that was allocated for, and just all the friction that has been put into the system now to get coverage, to be covered, and the work requirements, which haven't done well in the past, they haven't been particularly impactful. Um, Great, you're taking folks from not the most efficient, but certainly more efficient than the ER, and diverting them to the ER, which is the least efficient, most costly mode of care, and it doesn't have great outcomes.
Yeah.
So this country, we spend 4.5 trillion and growing. We have terrible outcomes. It's almost half the entire global spend,
Yeah.
and we're not even 5% of the population. And it's not like we're getting anything for it. So, yeah, the top line headline, I agree that there needs to be changes in healthcare,
Mm-hmm.
and so, and particularly around costs. But what they're doing and how they're going about it is really, it's painful to see.
Yeah. It's hard to digest because
Mm-hmm.
it seems very theoretical right now, but it's all going to hit
Mm-hmm.
after the midterms.
Mm-hmm.
It's crazy. Um, I know we're running short on time.
Yeah.
But tell me, you already mentioned getting up at 5:15. How do you stay healthy mentally, physically, and emotionally while you're raising money, deploying a fund?
Yeah. Discipline.
Yeah.
I wrestled in high school, and I learned that's what I really took away from that is discipline. And so I get up early. And I have to get up early because just the mountain of stuff to do,
Mm-hmm.
it kind of settles in overnight. And then unless I get up before the mountain, then I'll start hitting the snooze button.
Mm.
And now I'll get up later, and then I get behind. I'm just replaying old stuff, and then I get in my own way. Just doubt, all the doubt. Oh, I got all the stuff to do. I'm not where I want to be. Where am I with this LP? Why is it taking so long? And so for me, I've got to get up. early, both feet on the ground, have my power hour, which is, 20 minutes of some sort of physical exercise, 20 minutes of meditating, and then 20 minutes of, reading.
Nice.
Mostly
Wow.
policy stuff, which
Yeah.
is I like that. Other people I know, and that's a really good time for me to do it. So it's wonky, but I really enjoy that. That's my power hour, and then I make coffee
Yeah.
from scratch, and so I have the old school.
Do you have like the sock or do you have like a French press or what do you got?
The it's called a cafetera, but I don't know what it's mean. It's the original way to make espresso. The
Okay.
Bialetti,
Yes, yes.
that
The
that
the screw on
yeah,
the
the
metal
screw
thing.
on
Yeah.
with the
Got it.
right, the filter, and then it comes up. But the percolator, I think, so it's that. And yeah, and so that's when I have that,
Uh-huh.
I'm primed for the day, and then I can attack it, and I've processed all the cloud of doubt and all of the stuff that settles in overnight. But that's the only way, because when I didn't do that, I would always be playing catch up
Yeah.
throughout the day. I'm late, now I'm behind. I'm trying to justify staying in bed, hitting the snooze. And what I realized is just like when you hit snooze, you're hitting snooze on your dreams. And you can't do that. And this is once you find the purpose, then you've got to do that every day. And what are you gonna hit snooze for? You're gonna snooze that? No one would ever snooze on their purpose and their dreams. And so that's that's how I stay, you know, hopefully mentally and physically and just fit.
Yeah. I know we're running short on time, but just in terms of meditation, do you have a structure? Do you have a framework for that? Is it transcendental? I mean, 20 minutes is a lot. You make me meditate for 20 minutes and I fall asleep.
No,
Yeah.
it's just processing. And I'll just throw on any type of I love Joe Dispenza,
Yeah.
but he's got long his are long.
Mhm.
So I'll just do, mini versions, of that for 20 minutes.
Cool.
Yeah. That's
I've
my
got
it's,
I've got
it's
his 3 books and I haven't cracked them yet.
oh,
Yeah.
it's his approach is phenomenal.
Yeah.
And so I take it in small bites.
Yeah.
But the 20 that's my power hour.
Cool.
It's yours. And yeah, you should definitely, try that.
Amazing. Well, I want to thank you for coming on. The whole reason that we have this podcast is to help people understand how to raise money and the pressures that you're going through as a VC as well, and kind of understand that everyone who's doing this is human
Yeah.
and has different things going on, in addition to evaluating the startup and whether they want to invest or not. So thank you so much.
No, thanks so much for having me. I appreciate it.
Absolutely. And I'm Helena Fogarty, and this was Inside the Fund.